Oil has been consolidating higher in recent days as positive momentum strengthens, but is it enough to break a key resistance? Hello and welcome back to our channel. My name is Daniela Hathorn. And in today's video, we are going to be looking at oil. We're going to be looking at the recent moves in oil prices, but also what to expect in the next few weeks as we head into this month of September. But before we get into it, please like this video, comment, subscribe to our channel, and don't forget to turn on your notifications. So as I was saying, we've seen some positive momentum from oil recently. We've seen the bullish momentum consolidate in markets. We've seen it elsewhere in the stock market, for example. We've seen the dollar gains kind of halted for the time being. On the back of that, we have seen some jobs data recently. Yesterday on Wednesday, we saw the ADP data. It actually came in softer than expected, so lessening the need for more rate hikes from the Federal Reserve. Of course, we'll have to wait until tomorrow on Friday to see the official NFP data and also the unemployment rate to get the full reading as to how the labor market has evolved in August. That, of course, can bring some volatility into the market, so definitely something to watch out for oil traders and dollar traders. But that softer data for now, allowing a little bit more of a risk on sentiment as it downplays the need for further tightening from the Federal Reserve. We've also seen a drop in US inventories. It's the third consecutive week that we've had a drop in inventories, which is great, again, for oil prices. It's also the third week where we've seen a greater drop than expected. So that, of course, alluding potentially to a stronger demand or a demand that's being resilient. Looking ahead as to what we can expect in September, there are no official OPEC meetings on the calendar. The first one will be in the first week of October. But we'll also need to watch out for the Saudi Arabia production cut. It's expected that the country will extend its voluntary cut in October. So we may see some headlines on that during the month of September. That may increase the volatility in the market. But something that we have right now going on is the military coup in Gabon. It is one of the OPEC members. It is one of the smaller members. Nonetheless, it exports around 150 to 200,000 barrels per day. So definitely significant to some extent. And of course, the military action there has put President Ali Bongo in house arrest, and also the military has suspended the institutions of the republic and cancelled the elections that they celebrated on the 26th of July due to their perception that there has been manipulation in the process. So that is going on in Central Africa, as I said, one of the OPEC members. So definitely something to keep an eye out on as well. It's likely that this situation has kept oil prices supported as well. Now, looking at demand, of course, one of the key factors within oil prices is how demand has evolved. So far, domestic consumption, especially in the US, has held up pretty good. It's been very resilient. It's been strong. But industrial consumption has been weak. We've had some industrial data out from China this morning. The PMI is actually coming in above expectations. Yes, still in the contraction zone, so below the 50 level, but definitely better than expected. And that has also helped markets find a little bit of a footing this morning, seeing a little bit more risk on sentiment coming in. Of course, that supports oil as well. Also, taking a look at China, again, one of the biggest consumers of oil. They have actually increased over the last few months the export of diesel. And essentially that leads analysts to question whether it's the domestic demand that has been faltering and therefore they have an excess of supply to export. And of course, that alludes to weakening consumption in China. Recession concerns, we know elsewhere in Europe and the US, even though we've had resilient economies up until now, a lot better than we were forecasting at the end of last year. We have seen US GDP in the second quarter grow at 2.1%, below expectations of 2.4%, but definitely still some growth, better than the previous quarter at 2%. So we do still have a resilient economy, but nonetheless, concerns about growth remain, concerns about a recession with so much tightening that we've seen over the last year. And inflation still, to some extent, an issue for the economy. It feels like this overheating could catch up to consumers at some point, even though it remains strong at the moment. So demand is something to watch out for. Not necessarily the most impactful aspect in the month of September. It's more a longer term issue than short term, but definitely demand is going to be an important side of the equation. So it's all going to be a case of how are retail traders performing now that we're heading up to a key area of resistance. We'll see in just a second as we jump onto the chart. Have we seen the downside bets increase given the rise that we've seen in recent weeks? So let's take a look now at the chart to see how it's been performing. Okay, so here we have it on the TradingView chart. We've got West Texas Intermediate and also Brent. I wanted to have them both side to side so that we see this momentum clearly. But as you can see, over the last few days, we have seen some positive momentum building. We saw a little bit of a retracement from the highs at the beginning of August, finding some footing there, both in WTI and Brent, actually building higher as the last few days have gone by. As I said, we've got a key area of resistance up ahead, and it is pretty much the same dynamic in both of these. So looking at WTI, we're looking at that area between $80 and $82. As you can see, it's been clear resistance back here in August, but also earlier on this year in April and March, and at the end of last year as well. In fact, the last time we traded above this area was back here in November. Similar thing for Brent, as you can see. Similar dynamic. We've traded this area has been a key area resistance since November. As you can see, this area here comprised between 84.90 and 86.70. So again, a key area resistance up ahead, providing the halt to that positive momentum that we saw throughout July and August, finding a little bit of a retracement along the way. Now, if we're looking at the technical setup, it looks like the path of least resistance continues to be to the upside. I think there is some further momentum to be obtained here. In fact, looking at the RSI has been key for oil in recent months. As you can see, especially with WTI here, we have a clear pattern. And I mentioned this in the previous video. Every time that the RSI has neared that 70 line, we've seen a clear retracement in the market. It essentially feels like the oil traders are not allowing the RSI to break above 70, nonetheless trade above it. So we did attempted to break above it back here at the beginning of August as we saw this bullish momentum intensify. We did manage to break above it just there on the first day of August, but quickly retraced to the downside, as you can see. Seeing a little bit of a pullback, not significant enough to change the momentum, but definitely seeing those sellers coming in, trying to take advantage of those elevated prices. Looking at where the RSI is right now, we're just above that midline, currently trending around the 58, 59 level. So it suggests that given the pullback, we do have further room to continue this bullish momentum higher, essentially meaning that if this does happen, if the RSI does continue to pull up all the way to or just below that 70 line, it looks like we could actually be breaking this top side here resistance just around 82.50. As you can see, if that were the case, then we're looking at the next immediate resistance at around 84.50, which would be the highs back here from the 10th of August, but also that runaway candlestick here on the 17th of April. So as I said, momentum looking like that bullish pattern is going to continue, potentially breaking above this resistance and looking to consolidate higher. I do think that, as I said, given the positive momentum we've had, it's likely that retail traders are starting to positioning themselves in a bearish pattern in order to take advantage of any pullbacks. And once that RSI nears that 70 line, it's likely that the bullish momentum is going to fizzle out. And we may then see once again a retracement, allowing that overbought level to reset before seeing the next leg higher. So I wouldn't be surprised if we do manage to break above this key resistance here, but then find immediate resistance beyond that as new buyers or as sellers kind of retest that bullish momentum before new buyers come in. Similar thing for Brent as well, just different levels. Also looking at getting that RSI back towards that 70 line. We do still have, again, a little bit more wiggle room here. We're already within that key area of resistance. So already seeing those buyers interested in pushing higher. Again, looking to break above 86.75. Once we do that, we're actually looking at the nearest level of topside resistance here, just around that 89 level. And of course, that $90 is going to be a key psychological level. I would expect buyers to struggle to break above $89 per barrel. Similar with WTI, I do expect buyers to struggle to find momentum above $85 if there isn't a key catalyst that really increases the bullish momentum. That is it for today's analysis on oil. Thank you so much for watching, and don't forget to subscribe to our channel.